Hi everyone, welcome to Tuesday, and again we will take a look at the performance of the New Zealand Main Board for the stock exchange being the NZX 50. Now before I jump across and share my screen, just remember that this is for educational purposes only, definitely not intended to be personalised financial advice. If you're looking for that, you do need to have a chat to your own financial advisor. Right, let's take a look and see how the New Zealand Main Board performed last week. Okay, so last week, you can see here by this last candle, the market did close down for the week. Now, the interesting thing about this is the previous week, like I spoke about, we did close at an all-time high. It wasn't a significant all-time high for the fact that we see that dotted line. That is where the market has closed pretty much 3 times prior to that. So if we look at the week before's candle, where we did close a little bit higher and make those all-time highs, it wasn't a clear gap, if you like, above the other highs that we'd also seen in the market. So what this could mean for this last candle where our market closed down last week is, again, we could see a little bit of profit taking happening where people are thinking, oh, now's a good time to take some profit. Or it could also be the setup for a line of support. So a line of support is where a market will go along and keep sort of hitting that line before it goes on again, before it rallies on again. Obviously, the opposite can happen, but that's what we need to keep an eye on. Now, a good example of that is sort of through this period here. You can see where I've got my cursor. So that is about April this year. And if you follow that dotted line, you can see that we have hit that line going backwards. You've had 1, 2, 3, 4 weeks in a row where the market kept hitting that line before it did anything. The next week after that, if you like, was a positive week. And then we did see a little bit of a rally, pulled back, and then we've had this rally that we have currently been on. So that's what I mean by a line of support. Naturally, if it breaks down through that line of support where it is now, it could potentially mean that we're either range bound or we could be seeing the market start to fall. I do not like guessing where things are going to happen. The market will tell us, okay? So it's just a sign to just keep an eye on it and see what is happening. Now, I'm recording this on Monday morning. It's just gone 10 o'clock. And if you look up here to the left, you can see that the market is up just over 0.5%. 0.59% already at the moment. If you look at this ATR indicator down the bottom here, the average true range or the average trading range, you can see that it's gone down for the week. That means that this volatility is reducing in the New Zealand market. That's simply what that is really meaning. Okay, so if you take that figure, divide it by where the market closed, that will give you your approximate volatility. So if we're looking at 264.63, so that is roughly saying, on average, how much movement you could see in the New Zealand market over a 1-week period. And the more market movement there is, the higher that will increase. And if we divide that by where we are at the moment, which is 13,694.68, basically it gives us just under 2%. About 1.93% volatility. That to me is perfectly acceptable. Anything above 5 is a little bit of a cautionary sign, because it simply means whilst the market could be going up, you could get whipsawed around. Sometimes you could have strong rallies, you could have strong falls when a market hits above 5% volatility. So nothing to get concerned about there. Let's take a look at the 1-year chart, simply because it brings these candles up to dailies. And if I zoom in, you can see that Friday was a positive day, which is great, but the rest of the week, the market fell, okay? And that is something that we just need to keep an eye on, like I've been saying. We want to see more green candles than red candles. So having 4 days in a row with red candles is a little bit of a concern. The positive, though, is if you look down here to the volume bars down the bottom. So Friday, there was a lot more volume than the previous 4 days. When you see a green bar, and it means that the market closed higher than where it opened, so it was a positive day's trading. When you see a strong green bar, and it's certainly above, well above those previous red bars, that is a good sign. And you can also see that the red line that I've got there, which is a moving average over the last 13 days, it's popped above that. So that too is a good positive sign. When you see the market selling off and the volume contracts, and then it expands again when the market rises, that is definitely what we want to see. But like I've been saying, only time will actually tell us what is going to happen in the market. When I was doing my research over the weekend, there's still not a lot of opportunities out there. In fact, I'm still just holding on to my existing positions. I haven't been entering into any new ones for quite some time. And that is because we want to see a lot more participants, if you like, in our share market actually getting involved in this rally, rather than just there's less than 10 at the moment that I'm holding anyway that have been rallying quite strong. Most of them are really just trading in a sideways pattern or are being a detractor from the market. So we really want to see more of those 50 companies that make up our stock exchange or the main board start performing and having positive runs, rather than being, like I just said, detractors from our market. I'll just stop sharing. I really hope that's helped. Now, on Thursday, we are going to look at Argosy property. Sector has really come off over the last year or two. I've done several videos on property. I haven't looked at it for a while, so let's take a look at Argosy. And the last thing to remember too is, if you are new on your investing journey, I have got a really good self-paced course. I'll put the link in the description or the show notes that you are welcome to check out. It takes everything right back to the beginning, talks about managed funds and how to do your own research and tools that you can use to help you get started. So if you'd like to do that, like I said, the link to that is in the show notes. So until Thursday, do take care.